Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today and the futures were up about, I think, 7 or 8 handles, maybe a little bit more. Market held in pretty well. And then I think, people came in, tried to sell it down a little bit, wanted to test the metal. And after about an hour of just kind of slipping sideways, market had a bit of a push. And then towards the end of the day, came in and closed off the highs. Another day, which is what we've been seeing during the course of this multi-day, multi-week move. Nothing we're not used to. What we weren't used to is Friday, a day where we were down about 1%, and markets had a lot to prove on that day. And meanwhile, the spiders, the S&P, held the 10-day, which is very important, which shows technical strength. I've mentioned a few times that actually the strongest stocks hold their 10 and their 20-day moving average, let alone the indices. So not only are the strongest stocks breaking out and going, or some of them are, the indices continue to ride this upward trend. And until that changes, there's not much A, we could do about it, or B, there's no reason to fight it because a lot of guys are making money rotating around, and some days or weeks are easier than others. And right now, it was a bit of a tricky spot trying to figure out what to do between Friday and Monday. But if you look at the chart of the S&P now and you take what the opening and closing were, out of it, and here you are, we're still, well above this gradual incline. Remember what we talked about? This was the October 4th reversal low, and then here you go, a higher low. And literally, that still goes all the way to 1284. So we haven't even tested this since October. Here is where, you started a more increased or a higher angle type of rally, so to speak, which also we're riding and we haven't been able to breach. If you want to start it here, here's your new higher low, another higher low. It tested it right here when it went sideways after we had that brief, push through failure that wound up not amounting to much. You had a bit of a tail through this floor. Bears could not close it below it, and then we continued. Almost similar to what's going on right here, where we're going sideways. You had a bit of a down day Friday to almost be fully engulfed today. And now we're a stone throw away from eclipsing this high here, which is 1354. If you take a more macro view here, you take a look, and we're coming into the top end of the range. We've already almost taken out this little point of reference. And then the next point of reference we're coming into is 1370, the day we killed, Osama bin Laden. And if you look back and look at this rally, it's just like, wow, look at the angle of this, look at the intensity of this, but it's still intact. The trend isn't intact until it breaks. And every time it's come close to bending a little bit, and this is only a little bit, guys, it's still well above, or it's still trending with this 10-day and hasn't even really closed below it. So until it closes below that, then you see the 20-day, and then macro investors are comfortable when they come in and retest the 50-day, or this gradual uptrend right here. So right now there are different levels of a rally, or different composure, or different speeds, and right now this speed is still the same speed it's been since this December 20th gap and go, and just act accordingly. As far as stocks today, Apple, everyone was talking about a pre-market. It gave me a nice little push through 500. That was a decent trade. That was where I made most of my morning money. Bought it a little pre-market, or added pre-market, traded it through 500, sold some above 502-ish, 502.5, and then then some guys caught a cute little short. And then if you used Friday's high as a pivot area, the bears didn't have enough juice to get it below there, get a 30 to 60 minute close. It hit there, and if you were short, you had to cover there, and that's when it reversed, and Apple closed strong. If you look here at Apple, technically still moving higher. This was, the earnings gap up. Here is where you could have accumulated it and not having to even take it into the earnings, but looking at the power here, that they couldn't even fill it. It was intact. This was when momentum came in above these highs, and now look at it. This is Friday's high of 497.62. We closed well, above 502 pretty comfortably. You look at your 5 minute to see how it came in and tested it. Here you go. This was, this was a quick little move. And then here is your test of that 497. So I guess you go take a look at this, you can see a little bit better here. This was, here's that high. And look, we came right in, small little tail, sideways action, and then you could have, seen this nice little wide range bar, and this was your, I better cover, or maybe let me get long here and see if this downtrend that's been intact since the first 15 minutes of the day gets resolved to the upside, and it did. So a lot of different trades. This was a quick long. Maybe when it broke here, you could have had a cute short, below this 500, but then once it held Friday's high, you had to get out of the way. This was when you switch gears around 12 o'clock. Then it trended the rest of the day. Now you go back to your daily chart, and we'll see what happens tomorrow. And a lot of guys were talking about Amazon. It's been one of the weaker high beta names. Alex was actually talking about some kind of news release about the Kindle, this and that, and I kind of, didn't really focus in on it, but some traders saw the relative strength. If you look at Amazon now, on a mid-level basis, I drew this little area. Okay, this was your mid-tier channel. This being your area that if we get above, it would cause a little bit of a short squeeze, and it got above 187, 188. Nice move to almost 191. Next level here of resistance will be about 196. So, on a short-term basis, here was your, support after earnings. It was a buy into that. Gave you a quick 3-day move. Went sideways, broke above. If you look what happened the last time, just to give it a basis, this was like, your 3-day move. Then there was a channel also. But let's see anything different here. This one, tailed in. Didn't really fully fill the gap. And then it came back in the channel and headed lower. This one has already filled the gap with some power. So it's showing that maybe there is some demand for this. Okay, so on a micro level, if you're trailing it, you could stay with it. And then here's this little pivot high here. And then you have the moving average. And for a short-term cash flow trade, you're okay. And if you're a macro investor, you're still in the game because it's still holding above this 170 area, which was your line in the sand. As far as Baidu, still continues. You look at your daily chart, nice little 3-day move. Ever since it really broke this little pivot here, Sperling's been trading this one pretty well with a few of the guys on the floor. Here is your little buy, and now it's been 3 days into some resistance. So, not that compelling. Earnings are out this week, so just, leave it at that. As far as LinkedIn, powerful move Friday. A lot of, people on the site. I know Melanie was talking about it, a few others, about buying that dip. 86, 87. That was a nice area to buy against. And now we'll see if it could go sideways. And at some point, perhaps we get a nice little momentum trade if it were to get above this higher Friday, for a continuation. But it takes a little bit of time to digest what is, a nice move here. Qualcomm just really took the day off, and this stock is just really slow. I've been drawing, I've been trying to stay with this in my swing account. It has been holding above this resistance. It's still holding the earnings gap. Some people were saying today on the site that something going on with like the World Conference, this and that they think Qualcomm might have, have some problem with some of their patents, and that they might lose 3 of them. Let's see what materializes there. So that got me out of a little bit of mine, but I'm still in Qualcomm. If you could ever intraday get above this 62 with some volume, I drew this line. Obviously, it didn't happen this day or this day. Maybe at some point, it'll happen as we move further into this consolidation. But at this point, I think you could be in tier 1. Even as a momentum trader, just put your stop in around 60, 50. Or if you want even a tighter stop, we're now in this upper end of this little channel here. Here's your channel, low end, high end, holding the middle area of it. So we'll see if we can get through there. As far as on the short side, guys took advantage of Netflix. Netflix is a good example of your time frame and know your risk, because we isolated on February 7th that red dog reversal where potentially the trend could change. It could, for me, it was a good day and a half trade. For some, they shorted it at that price point, 130.50, and said, you know what, my stop's at 133. I'm just going to trail it, let this trade be bigger. This is my swing move. And if you look at Netflix, hasn't violated it the whole time. Here you go. This was when it broke above this lower resistance and ignited the move in 2012. Then you had a nice move up. Here was your earnings move. And then remember this red dog reversal didn't really amount to much, but it gave you a day and a half trade. This time from a higher level, it actually closed red where this one didn't. It gave you a nice little 2-day trade if that's all you wanted. If you wanted to trail it with a stop at the high of that day, which was 133, and if you initiated at 130, you had only $3 risk. And for what has been now almost an $11 reward. You didn't even have to be honest, hold it the whole time. I wasn't short overnight today, and when it broke below this area here of 120, 122-ish, I shorted it there, and I shorted a little of 120, and I was able to cover above 119. So, if you didn't want to have the overnight risk in Netflix, which I know is scary sometimes, you could have, taken this day-and-a-half trade and then re-entered after it showed that you couldn't bounce after 3 days, and now you have another area. And if it were to open up and break below today's low tomorrow, so to speak, it's going to probably test this earnings gap, or at least this moving average right here, which could be another trade. So it just goes to show you how you ride it from the long side, and then you see a topping tail, you switch gears, and you can make cash flow that way as well. As far as the banks are a little weird today. You had Bank of America continuing its incremental move higher, so you macro investors in Bank of America, if you're staying the course, they're fine. I think if you had a tier 2 or tier 3, you sell some. My first target of $8 was received, or happened really early, and now, it looks like the next area of resistance is closer to 10. So if you look here on Bank of America, this was the first area, and we wound up holding higher. It gets above this. This is your next real big macro area when it broke down. Remember when it broke here of this 32? So it's got some room between here and there. So you can stay with it. JP Morgan perked up today. It's now above this 38 area. This has been the uptrend that's been involved in. This was that day it rejected this resistance going across. Not much of a pullback. You had a nice 2-day move back up. So now with a bit more sideways action, perhaps it takes this out. Goldman and Morgan were weaker today, so we'll see what happens there. Still, though, holding above, this support. This, I would say, for macro or momentum guys, 113.26. Some guys would you short Goldman? Really shorting at support levels have not been working. If all of a sudden it breaks 113 and it starts to go lower, maybe it'll show us that something changed a bit. A few times we've watched that with Goldman, and it's been a good barometer, of market direction. This was the earnings that came out. When it ignited, this helped us to forecast this move higher or this next leg. And now it's hovering in front of resistance and can't get through. So we'll see what happens if it either falters or just needs time. So let's watch this for market composure. OAHs were, in line today, still hanging around, still, flagging here. I'm still long. I've been trying to stay long ever since here. There was a nice little trade through when it broke this downtrend, and now it's holding sideways. It'll be interesting if it could finally take out this 131, 132 with some force and some volume. But it's hanging in there. It's been a good macro investment for 2012, and I've had it on my virtual trade floor this entire time. So hopefully it's helped you hold something besides just trading for cash flow. As far as funny, dries, just shows you how, even small little stocks you can make a lot of money with. If you remember on that Friday, Sproul was like, oh, dries, look at the volume spike that came in here. You put the volume in, obviously, we just read the tape, and if you look here, the tape said, wow, here's a big volume spike, it much higher than all of this. So this was the day that I bought some. This is the day I added, and I actually got rid of most of it in here, so I wasn't in for today. But the volume is still there. It's on the move. It just shows you that you could time these markets based on chart patterns, considering nice little downtrend, big day, 2 days of volume. This one was even more than this day, and there you go. GNK also, nice move, volumes increasing, back to the highs. The little guy here, EXM also, from $1.60 to almost $2.40, big percentage move, a little sloppier, but it is what it is. So there's still a lot to do. And obviously, they're not giving away money on trees. Otherwise, everyone would be trading it and everyone would be just high-fiving, and that's not the way it goes. You have to work for it. You have to find the right pattern. You have to look for the relative strength. You have to know your time horizon. You have to know your share size. You have to be honest with yourself. There's a lot of things that go into this formula, or this fine line, and whether or not you could execute the trade correctly, whether you could make money, whether you could continue to make money, or whether you could make more money. It's all a big work in process. And that's why we're also trying to put together all these education programs for you, whether it's the active trader or the momentum trader or the swing trader. Different types of courses based on what you want to do in this market, because everyone is different. Everyone has different needs. Everyone has this different risk. Everyone has different time frames, or not even time frames, just time that you can allocate to the market. So once you realize which one that is for you, you could use the site more effectively. If you're looking at T3 Live and you're seeing it from Twitter or you're seeing it from another affiliate, there's a lot more that goes on our site. Check out our site, check out our education, check out our free 30-day course. There's a lot you can do. We're also going to be speaking at the New York Trade Show next week, doing I think 6 to 7 to 8 presentations. I'll be doing 2 for Schwab, as showing how you could actively approach the market as well for someone that doesn't trade professionally or all day long, but as well as obviously in our booth with T3 Live and the crew. So I'm not here to pitch, but I'm just saying that there are some guys that don't get the full story, that see our content in other places. If you want the full real deal, you come to T3 Live, you become a virtual trade floor member, and then you see how we could take you to the dance, take you home from the dance, and maybe twirl you around once or twice with a dip. Anyway, Scott Redler, T3 Live. This was the recap. See you tomorrow morning at the call. Have a good night.